Financial inclusion, the idea of leveling the playing field when it comes to access to financial services, is not a new concept, but the coronavirus has made it more of a pressing issue than ever before. Additionally, the recent speculation in meme stocks like GameStop have put a spotlight on the need for more financial education. Two thought leaders we know quite well here have put their heads together and tried to come up with a plan of action. They write about it in the American Banker magazine. And joining us right now for more on this is John Hope Bryant. He's the founder, chairman, and CEO of Operation Hope. Also, Jay Clayton, who's the former chairman of the SEC and the lead independent director at Apollo Global Management. He's also a CNBC contributor. And gentlemen, first of all, welcome. How did you two get together? Who wants to tell the story?
John, I want to compliment you. So when I left the commission, I was interested in continuing work in financial inclusion, and I asked a mutual friend to put me in contact with John because the work he's been doing over the years is just exemplary. So we connected, and we've had a great dialogue since, at least from my perspective.
Well, you know,
hey,
Becky,
John, we know. Go ahead.
No, I love odd couples. You know, when you come from different perspectives, you tend to come up with a better product. Abraham Lincoln and Frederick Douglass couldn't be more different, but they put their heads together and came up with the Freedmen's Bank. And, you know, Dr. King and a range of other leaders have worked with people who are at a range of disparate views, but they had a common ground and a common interest. And Jay cares, and Jay cares, and he's smart, and those are two great ingredients. And I think he has integrity. Those are ingredients I need for to create change in the world, which is what I'm trying to do.
John, this is a problem we've spoken about with you for some time now. But what's this new plan of action? Well,
tomorrow is the last day for automatic deposit for stimulus checks, and what are we going to do with it? What we know is if you invest long term, you're going to have more winners and losers. If you invest short term, you're going to have more losers and winners. And I just think that, you know, you can't get off. Jay and I were talking about this. You can't go to a car dealership and leave the dealership to be buying a car without having proof of insurance and proof of a driver's license. And if you have insurance education or driver education as a young person, you get a better rate. I think that the market should look at African Americans as an example, as an opportunity to expand if we treat them right and prepare them, because half of black folks are invested in comparison to whites. 30% of blacks are invested. 60% plus of whites are invested in the market. And for every $100 of white wealth, you have $13 of black wealth. It's morals and money. You can do well and do good, but I think by giving more education to everybody, irrespective of race, I was just giving that one example. You deepen the bench strength, you strengthen America, you strengthen markets, you create more customers who trust you. And I think it's good for everybody, and that's the opposite of gamification.
And Becky,
it sounds like a good plan, but how does it, go ahead, just how does it work from a practical standpoint?
Well, that's a great question, because that's where I was going. With technology today, the cost of connecting people to the financial system is much lower. And the cost of providing education at the point of sale is much lower. We ought to be using the power of technology to enhance these things. Look at the CARES Act, the distribution of checks that John mentioned. If every child had a bank account from the day they were born or when they're 5 years old, getting checks out, we won't have checks anymore. Getting payments into people's hands so that they can use them would have been incredibly efficient. But at the same time, you would have grown up understanding what it's like to be connected to our financial system. If you're not connected to our financial system, you're starting behind. And if you're not educated in how you're connected, you're going to make worse decisions, which the poor outcomes amplify over time. We know all that. Let's use technology to address that.
Shepard Smith here. Thanks for watching CNBC on YouTube.